Good evening, everyone. Time for another silver update. This is the 8-hour chart of silver provided by netdania.com. You can click on the link below. Drawn out a couple of things here. First, the primary downtrend line here that you can see we very clearly breached. I had drawn resistance lines from this top here and this top here. We have one left. I've been calling it 36, saying that our prices were 34 and 36. It's a little bit below 36, but for all intents and purposes, it's the 36 range. So that's our next target. Now, I've drawn two lines pointing to these next consolidation ranges. These will be resistance ranges, and these are areas where the price is traded quite a lot. So there's going to be a lot of overhead resistance in these ranges. This first one is from roughly 36 to 39. The reason why I drew this one where it is, I drew the bottom of it because it kind of marked the breakout point, plus it marked these spike downs that always recovered. Then I drew the top of it because it is the top of this trading, but it's also the takeoff point of where this last collapse went. So that's the first range. That's the one that I expect to see quite a bit of choppiness. I do not expect to see a move like we had today, where we just ratchet right up through there. We may have some continuation through 36, even maybe to 36.50, but then I expect us to hit a lot of resistance in this consolidation area. Then the next target's going to be 39, and that's going to lead us into this next area. So the top of that one is around 43 or so. That's going to leave this 44 top to be the final one we need to get through to make a run at the 50 price. So I expect it to be a little bit choppy going ahead, but this is very clear here. As I pointed out with gold, that silver was lagging gold, and I expected some catch-up to be done real quick. I think the percentage move in silver was massive today. So you can see we've very clearly broken out of this line here, and now we're looking at these next targets. With the gold price, we had another move today, not nearly as strong as the daily move percentage-wise in silver, but of course gold was already ahead of silver. So we have this resistance point up here at approximately, well, I got my line on here, but we can use that, at about 1800. So that's going to be our next big goal to get through. It's really only about 23 bucks away, and as far as the high, I think we hit 1787, so really only 13 bucks above the high we hit today, and then it's off to the races to that 1920 high. Now over to oil. Oil is just amazingly strong. I thought that was going to be the case. If you remember the line that I drew that came down from this top here, and we clearly got through it, and once we got through that, you can see the strength that we have. We really only have 115 up above to get to, and you can see it's fairly clear sailing between here and there. There's just not a lot of action between those 2 points. So oil very well could move very rapidly up to the 115 point. Now I want to take you over to the main story of the night. I'm going to start with a video that I covered on the blog, and this is an interview with Janet Cavicoli. And I'm just going to go ahead and play this interview. It's real short. I'll let you listen to that real quick here.
No doubt for years to come, we are going to be learning lessons from the global financial crisis that we are still today trying to recover from. I think we're so close to it, and it's kind of hard to have a full accounting of really what did happen and who to blame, which is why we turn to experts like Janet Cavicoli. She is the president of Cavicoli Structured Finance. That's a consultant to financial institutions. And you chronicle all of this, the who and the why, in your new book, which is called The New Robber Barons. And you point out with rather strong, vociferous force that you feel that there is something profoundly and fundamentally wrong with our financial system.
Well, I feel that way because it's true, Bill. What we've learned from this crisis is that when you throw trillions on the table, nobody tells the truth and everyone plays for keeps. And that's what's happened here. We've had perfectly good laws on the books, perfectly good regulations on the books, and they haven't been enforced. Instead, bankers used their massive wealth to lobby Congress and basically to get off with a slap on the wrist for what was actually widespread massive fraud in our financial system, combined with leverage, which led to swift, rapid upset in September 2008, and we had to bail everyone out.
From your understanding, you feel that there are absolute villains that should be prosecuted here, in part because some of these structured products were just egregiously flawed. But a lot of people...
More than that, I'm saying at the top of these institutions, we had CEOs and CFOs who signed off on accounting statements that were false. Now, if you look at 2007, after HSBC declared massive losses, our banks didn't write that down. Now, under Sarbanes-Oxley, they signed off on statements that they knew or should have known were false.
So, Janet, do you think that there are lessons learned that we are not learning or will be suppressed because the particular interests who would be hurt by having those lessons learned don't want to have more regulation?
That's what I'm saying. They've played keep-away ball. They've bought off Congress through campaign contributions so that they haven't gone after them in an effective way. We should be seeing more than 1,000 indictments, probably a couple of thousand felony indictments for massive widespread fraud in the financial system, and not just the people at the bottom of the house that they've been going after, one or two guys, people at the top of the house who were in charge of our largest banks during the financial crisis.
In a word, Janet, do you think that we are vulnerable for a repeat of any part of this?
Yes, absolutely, because when you let fraud go unpunished and you have no consequences for that kind of behavior, you are setting yourself up for the next bigger financial failure, especially after you've printed money like crazy to try to bail people out of the last one.
Janet Tavakoli's latest book is called The New Robber Barons. Janet, thank you so much.
Thank you, Bill.
So we have a lot of people speculating. Max Kaiser talked about these same sort of topics today. And we have a lot of people speculating about the inflationary policies that the bankers are following. And there's a lot of people going into conspiracy theories and talking about what the gigantic plan is that they're trying to steer the world towards. And in this, I'm not going to say that I disagree with those people completely, but I'm just going to take a different tack in this one, and I just want to show you some things from the past to point out that I think that the explanation might just be a lot more simple than we think it is. So the first thing I want to take you over to is Charles Keating. I don't know if you're all familiar with Charles Keating, but I'm going to read to you the outline of what happened to him back in the 1980s with the savings and loan scandal. Keating was a champion swimmer, etc. In the 1980s, Keating ran American Continental Corporation and the Lincoln Savings and Loan Association and took advantage of loosened restrictions, sound familiar, on banking investments. His enterprise began to suffer financial problems and were investigated by federal regulators. His association with and financial contributions to 5 U.S. senators to argue for preferential treatment from the regulators led them to being dubbed the Keating Five. When Lincoln failed in 1989, it cost the federal government over $3 billion, and about 23,000 customers were left with worthless bonds. In the early 1990s, Keating was convicted in both federal and state courts of many counts of fraud, racketeering, and conspiracy. He served 4.5 years in prison before those convictions were overturned in 1996. In 1999, he pleaded guilty to a more limited set of wire fraud and bankruptcy fraud counts and was sentenced to the time he had already served. So that's an example of one of the crises that we had in the past. Now, that crisis compared to what we went through in 2008, and of course what we're going through in the future, is just peanuts compared to what we're looking at now. And the theory that I'm proposing is that rather than the plans of these bankers and these plans of these congressmen and the plans of the Fed and all the rest of these being some complex machinations to try to create some new system or something other than that, I think that really it's a lot simpler than that. I think it's just an extend and pretend, kick the can down the road just so that they're not in office when the whole thing comes falling apart. Now, I wanted to take you over to a little historical incident you might not be aware of. This is the This occurred in the French Revolution. This was the public execution of Louis XVI. The execution of Louis XVI by means of guillotine took place on the 21st of January 1793 in the Place de la Révolution, Revolutionary Square, formerly Place Louis XV and renamed. In Paris, it was a major event of the French Revolution after events on the 10th of August 1792, which saw the fall of the monarchy after the attack on the Tuileries by insurgents. Louis was arrested, interned in the Temple prison with his family, tried for high treason before the National Convention, found guilty by almost all and not guilty by none, and condemned to death by a slight majority. His execution made him the first victim of the Reign of Terror. His wife, Marie Antoinette, was guillotined on 16th of October the same year. And it goes into the history of how that occurred. So there is historical precedent for uprisings because of the corruption of these high-level people. And I really think that it's just something as simple as that. Now, of course, I'm not saying that I think that the people are going to rise up and have revolutions and guillotine the leaders, etc., or the bankers. But I do think that there probably will be factions that come forward and use the outrage of the people. Of course, I don't think the outrage of the people is going to be there until the people lose everything, and that's one of the reasons why they're kicking the can down the road. Keeping the stock market up, keeping the pensions there, keeping Social Security there, keeping all these things there, welfare and all these other things. But imagine if these things were just vaporized overnight. Can you imagine the anger of the people and who they would look to blame? Well, you can bet that there would probably be a power that would arise, whether it would be democratic or even perhaps military, and I'm not talking about any particular country, but there are obviously going to be people who come to power who are going to try to placate that anger against certain people. So I think the people in power in these various countries are aware that there's a very dangerous potential that they could be in office when the collapse comes. They could be targeted by the next regime. To be perfectly frank, I thought that Barack Obama was probably going to be the one who took on the financial elite. I just kind of guessed that by a couple of things, but I was a little bit surprised when he let Volcker go in kind of an unceremonious way, and I thought for sure, it appeared to me that they were going to try to take down the bankers, but it apparently is not the case. So I wanted to take you to one other thing real quick here, and that is the history of the Roman Empire. This is the actual history of the Nerva Antonine dynasty, and read to this a little bit of this to you. The Nerva Antonine dynasty was a dynasty of 7 consecutive Roman emperors who ruled over the Roman Empire from 96 to 192. So that's very, very near the end of the Roman Empire. These emperors are Nerva, Trajan, Hadrian, Antonius Pius, Marcus Aurelius, Lucius Verus, and Commodus. The first 5 of the 6 successions within this dynasty were notable in that the reigning emperor adopted the candidate of his choice to be his successor. Under Roman law, an adoption established a bond legally as strong as that of kinship. Because of this, the 2nd through 6th Nerva Antonine emperors were also called adoptive emperors. So this is very interesting here. Now, the explanation that we get is there's a lot of political explanations about why they would do such a thing, but I think the explanation is actually much more simple. If you look at what happened to many of these, if not most, and these are just the 7 that were in this period, there are actually many others, including Nero and some very famous ones that were adopted, and as well as the insane, the one that, I'm sorry, I can't think of his name right now, but there have been a number of adopted ones outside of this, and I'm sorry, it was Caligula. So these these explanations that have been given are that they wanted to control the succession, they didn't have skilled people in their families, etc. I think the explanation is a lot more simple. It's just simply that the people who were emperors knew the fate of many of these people, and they didn't want their own children to be executed, poisoned, and many of these had to put down rebellions and some of them died in trying to put down these rebellions. So it got to the point near the end of the Roman Empire that it was not in the interest of the reigning Caesars to have their own children walk into the fire, because there was a very, very high likelihood that they would meet an unfortunate demise. So I think the powers that be that everybody says are plotting and planning this great big world system and all these other things, that may not be the case. It may just be that they are trying to avoid being the next Charles Keating, and heaven forbid it gets worse than that, they're trying to avoid being Louis XVI. So I think that's the main reason why we see not just the kick the can down the road activities that we have with the money printing, which basically puts things off onto the next guy's watch, but also some of the very restrictive laws that are being passed, because it seems that the people in power know that there's going to be a time when this system completely collapses and someone is going to get the blame. Now, I don't think that it's necessarily the people who are going to exact vengeance on the people who are in power or were in power at the time, but there's a very high likelihood that another regime that comes into power will target those people and they will hold them responsible. So if you are a person who's in power right now, as Janet Cavicoli said, she's expecting massive indictments. A lot of others have said that. If you're a person in power right now, you're playing a very, very risky game. It's in your interest to try to get as much money as you can real quick, get out of office or get out of power or retire, and just get forgotten real quick in case the thing collapses and someone comes after you and tries to hold you responsible because of the anger of the people from what happens as a result of this collapse. So I think that's the simplest explanation for a lot of things we're seeing. We'll see if these indictments come down when the system begins to collapse. So back to the silver chart. We are very clearly in a strong bull phase here. We had a big jump today, a very large percentage move. Of course, silver's pushing on a 30% gain for the year. Now, if you remember the previous years, we returned 86%. I think in 2010 we had many double-digit years and above 50% years. So it looks to be shaping up to be one of those years. And of course, we have this massive pennant formation, the largest one we've ever had that's forming, and this very well could be pointing to an absolute explosion of price that rapidly takes out 44 and actually takes out 50. That is, I would give it a 1 in 5 possibility that we could have that type of a run. Otherwise, I expect us to just churn through the 36 and 39 area, and then the 39 to 44, 43 area, and then slowly make our run at 50. And we'll talk to you next time.